Two stocks to watch out for in reality sector in India market. Setting up very nicely. One is a large cap stock and one is a small cap stock. And what we're going to cover is today in studio video is we're going to cover the reality index because it's important to look at the index and further do analysis on the specific stocks. And then we go into stock one of which is setting up nicely in technical analysis point of view. It is a large cap stock, but we have covered that widely in this channel before. But we will see where we are from the current trend. Second stock, which is a small cap stock, we will do a technical analysis and we also do a fundamental analysis. At the end, I'm going to talk about why we should analyze both technically and fundamentally, and also give you a nugget to simplify the both how to look at the profit and loss, balance sheet, and also cash flow, and just so that you have some nuggets to take away when you are doing your analysis as well. And if you are new to this channel, definitely do consider subscribing because I'll be coming up with the more videos like this. Now let's start with the first stock. First stock is in question is DLF. Now I don't know whether you're following me new on this channel or you have been following me earlier, but on TradingView, I am followed by as a compounding central. So I posted this on September 16, 2022, and I made various videos also on this channel for DLF. And this was a multi-year trend line, and I this was in September 2022. And important point is that this stock was at that moment of time was trying to do a multi-year breakout, and this is, as you can see here, this was a time of 2008, and now in 2022 it was setting up very nicely. So what happened after that, I want to cover that. And if you further do click on that arrow, you will see that the stock has been consolidating very nicely after that. So anything which is in this color, green color, is after I posted that on my TradingView profile. So you see 1, 2, 3, 4, 5, 6, 7, and this is a monthly candle, by the way. And when we are doing monthly candle analysis, we are looking at for the long term view. We are not looking at medium to long term view. So we're not looking at like swing trading or scalping or anything. And that's not part of the peaceful weekend investing. I do that. So if you see, this is for last so many months, it has been setting up nicely. And now it's in very good big candle has been formed from the recent current month which is going on. So let's try to analyze it more deeply in terms of the where I see the levels are. So if you haven't gone through my TradingView profile, just go into sbhatia.co/tradingview and search me up as a compounding central, because sometimes creating videos are very hectic in terms of in a busy schedule. But I do keep posting regularly in compounding central, so you can follow me there. Though this account was created much earlier than when I moved as a peaceful weekend investor, so it is like still I can't change the name. It still is compounding central, but at the end, our objective is to have compounding in wealth, health, and in all our relationships. So it's very important to focus there. Now, just make a note of it. It is 17th of April 2023. So when I'm doing this analysis, this is important because if you're watching this video later on. Let's look at Nifty Reality on a weekly basis first, where we are. Okay. Now, if you see here where we are from the weekly basis, is it formed this kind of analysis in this, if you look on this particular pattern, and it had a big eruption, and then after that it kind of goes on sideways, right? To me, it is still in downward trend. As you can see, if you draw it, it is still in downward trend. And only levels which I'll be tracking is these levels, which is 475.5 and 482. If it crosses above, it becomes a positive trend to me. Otherwise, it is more so it is sideways because this is on the weekly. Now you can track it on daily basis, but these levels which I'm tracking is also based on some my own understanding and experience, and these are the levels, key levels. If it goes above that, then definitely we're going to see higher levels going all-time high. Can't be ruled out. Again, it's all we are trying to do a probability in our favor. There's no prediction as such because prediction is futile. I can't do that. It's just we follow the charts, we follow the news, and we look at it what exactly is going on chart and make the bets on that, right? So the trend is down, but there has been good moves the last couple of weeks, and that was because of the repo rate has been kind of paused at the moment, and there is chances that you will have a good attraction on the housing stocks. And I've been to India recently, and I can see that there's absolute, you know, pent up demand post COVID. People are buying houses like crazy, and I think, and tell me what exactly you're observing. That's my understanding, especially for the Bangalore market. Now, these are the levels on the reality index. So the trend is at the moment is, I would say, on sideways a week. I would say at this moment, I can give that as a moment. It's because last 2 weeks has been there, but that not the basis I can say that it can't fall back. So it is important that we keep track of it and see whether it goes up. And just one minute, let me try and delete this and start again. Yeah. So if you see, we can go up from here and touch it, and or we can go back to the our levels. We don't know yet, or it goes sideways and then go up. So we have to see how things goes up. But eventually, these are levels I'm tracking very closely. But now, as the index is moving up, we have to look at specific stocks to make mega money, and that's what I do. And when you go into the stock, first stock, right? First stock which we discuss is doing a multi-year breakout, and we have discussed before many times in this channel. And first one which I talked about is DLF, where we are, right? So this is the current weekly chart. Please make a note of it. This is DLF weekly chart. So it has been doing this. If you see, it has been giving this rounding pattern, and then it has been on sideways, and it is kind of almost on the verge of breaking this long-term trend and the orange line. If it goes up, then you're looking at very big rally in the stock, because it has formed from last 2008, and now we're in 2023. So it's going on for several multi years. So you have to keep note of it. When such thing happens, what happens, you can check that out for Reliance, you can check that for ITC. There is a absolute, and it is from the from trend wise, it is possible. You can see here it is just making higher highs, right? So it is very positive. So keep that in radar. I closely tracking this, and I'm sharing this so that you can also do your own analysis and take the right decisions for yourself. Do consult the financial advisor before taking a buy and sell. This is just not any recommendation. So let's look at some of the, just to cut the noise, I want to show you monthly chart as well, because I only look at monthly and weekly. So this one gives you a very clear trend, right? You can see what has happened in the last this current month. It is almost on the verge of, for last 7 months or 8 months, it has been on sideways, and this is a mother candle. And after that, it is not taken the low from here, which is around 300, and it's just going sideways. If it closes above this, you can see a retest and then go up. And I think what is important here is the two candles, right? This one, which tells you, not a doji, but it is telling some kind of indecision in terms of taking it further down. So the buyers have come back strongly this particular month. We have to see whether they can sustain the rally or goes again sideways, because at the end of it, we are the slave of profits, and we want to make sure that our money compounds, right? So, but it is making higher high, which is clear. And from this trend, only thing is resistance is this multi-year trend line, which is the orange line, and we have to track closely. And you can, what I'm doing is I'm looking at the absolute stop loss and or line of control as this level, and then if I haven't taken any bets so far, but I'll be closely watching it, and if I get an opportunity, I'll start acclimating this share for long-term basis. No recommendation, just sharing what I will be doing in case I'm interested in that. Okay, but I will closely watch the reality index as well, how it's performing, and accordingly increase my bets. So that's DLF for you. Let's look at some of the fundamentals of it. Market cap is almost like 1 lakh crores in Indian rupees. Stock P is 54, which is the higher side. ROC is 4.84, which is not that great. It is close to a 52-week high, which is what you can see on the chart. Price to book is 2.8. 52-week high is almost, this is my own calculated figure, so I can see that on screen. how close it is close to 52-week high. Those who know that 52-week high is a good number to track. If stock is making 52-week high, that means there's something going on. We have to start tracking them closely. So current price is 413, book value is 148, ROE is 4.61. Obviously, to me, DLF cannot be a long-term stock, obviously because it doesn't fit in my parameters for long-term portfolio. Debt is around 3,864 crores. Debt to equity is 0.11. And this is my own score, which I give based on my own calculation. If you want to know what that score is, just hit me up and I'll share that. High and low, I also want to look at what is high and low so that I know what was the lowest for last 52-week high or lowest in that particular period. Dividend yield, it gives you dividend, but it's not for dividend yield we play this stock. And they have reserves. Again, being a capital intensive stock, so you have to look at it from that angle. And the interest coverage ratio is also important, 4.24. So that means it is able to whatever their earnings are, they 4 times they can easily have that capability to pay the interest, which is good sign. So that's the first stock. Now, moving on to the other area, which I also look at it because that tells us whether the stock can be also take a good move. Is this is from the BSC, is what is the free float, right? So free float of the stock is 25,588 crores. So that means this is the free float which is available in the market, right? And this is important number to track because if you want a volcanic moves, you have to look at free float stocks. If it's free float is less, you chances are that you may not get exit. So it is kind of a double-edged sword, but you have to look at it. If there's a lot of free float available, that means a lot of people are holding that stock and could be many retail holders. And you have to look at the distribution of the stock. Market cap can be is 1 lakh crores, but out of that only 25,000 crores is what available in the market. Rest is with the promoter or available but not available for trading. This is a good number to track. Rest all I think we covered in the previous one. So let's move on. So that's the first stock, right? Now second stock. If you haven't subscribed to channel, do consider subscribing because that will give me encouragement to come up because it takes a lot of effort to come up with these kind of videos. So I'll appreciate that. Thank you. So this is first time I'm discussing in this channel. This is also a small cap stock. So please make a note of it. It's looking very promising. I haven't have any position, so I'm telling you a clear disclaimer. What we'll cover is a technical and fundamental analysis and discuss some key levels I'm tracking. Okay. And as we go on, we'll keep tracking this stock and see where we are. So the company name is LDCO Housing Industries. Now, this came into my peaceful weekend peaceful weekend screening, which I was doing, and what caught my eye was this is a weekly chart, right? So let me just do a sideways. So if you see here, stock for last, and this is 2018, right? This is a weekly chart, and it for this period up to 2018 to July 2021, it went and gave a good rally, and then it kind of fizzled out, come back and retest this level. And what is important for me is it's holding this level, right, which is good sign, which is 538. Today it's trading at as we recording this video on the Monday morning before the market open on 17th of April is 605. What is looking when I look at it, it is this sideways movement, and there is not too many bars which are saying that it's gone down below a particular point, right? So which is also a promising sign. And if I have to just delete that and try and do that once again, yeah. So you see this level is a crucial level, is holding up, and now this level is something having a little bit of congestion, and after that you are looking at some decent levels to look at it. First level is 750, and then it can even touch 976. What is important here is knowing what is your downside, right? To me, 500 is absolute. I generally have some absolute numbers, not specifically look at it because market knows what levels are. So I would rather keep slightly lower. But if I were to take the position, in this, because if it goes down from here, and if it goes down from here, I want to make sure that I'm protecting my capital, because the only thing what is in my control is the downside protection, and upside is not in my control. So I have no idea when whether it go up or not. Time will tell. I can do my analysis and add uh, some of the probabilities on my side. Okay, so given that there can be a volcanic moves, that is what we can learn from the history, right? Now question is, what is my downside? I generally look at 8 to 10%, which I'm okay to lose in case it doesn't go, because upside is big, because you can easily make 3x or 4x return to your risk reward ratio, and that is what I can see. And why do I see that? I haven't done the volume analysis, but volume is very, very low. If you look at the volumes and we look at the chart, the volumes are very low as well. Um, let's look at some of the fundamental part of it, and then we go cover back on the chart again, because I want to cover some important areas. The stock is first thing you have to make a note of it. It is very small stock, 587 crores. So this is something you have to make a note of it, because if if you are not looking at it, then you might risk a lot of money, because and that is where it's just 587 crore stocks, so which is very low for. If you take a big position, you may not even get an exit, which is important. And current price is 597, and book value is 333. ROC is very good because it's small, but it's pretty good. Return on capital employed is 23%. Anything above 15, 16 is pretty good, and it is 34% from its 52-week high, which is getting in the range. And this 52-week high is 1.94. ROE is 17.77. Debt is very low, which is good sign. And we'll look at the financials as well and then understand that. So high is 790 and low is 500, and that's what I said. This is the lowest low, so I would look at slightly below this, and if it closes below this price, then obviously it's a weak stock after that. To me, it gives you dividend, so it looks to be good, because at least they are thinking of retail shareholders as well. They have 325 crores, so if you look at it, out of 587 crores, they have that much reserves available, which is, and they have 33.7 interest coverage ratio, which means their debt is very low, and they can cover their debt 33 times of their earnings as of today. Okay, now as we covered that earlier as well. So free float is 253 crores only out of 588 crores as a market cap as of today. The 253, and which is a close to less than half, is available in market, which means, what does it mean? That means if little bit of buying, the stock can go like a volcanic eruption in this. So that is what it tells me, but it can work both ways as well, so keep that in mind. Don't go by my analysis here, but I'm just saying do your own analysis. I'm just sharing what I am seeing in the market to make you a better informed investor. So I hope this was useful. If it was useful, type useful on the comment box below before I jump into the fundamental analysis and give you the nugget for today, right? And we will look at LDCO industries, which is, we look at the operating profit, quarterly results, profit and loss, balance sheet, and go through cash flows, all right? And also look at some of the ratios. But before that, I want to cover some basics. I know a lot of my viewers also ask me to cover them basics, so I want to cover that. This particular simple explanation of what is profit and loss, balance sheet, and cash flow will give you some context. So, what is profit and loss? What does the profit and loss test tells us? It tells us what is the income, basically what is coming in minus expenses going out. That's your profit and loss in a very simplistic term. What is balance sheet? What asset you own, which is, you might have machines, factories, the land, or you might have invested capital in terms of mutual fund or something, or you have cash balance. So that's your assets. What is the liabilities could be due to due to your lenders, due to your debtors, or all of that will come in as part of a liability. That's your net worth, and you can calculate that your net worth of your own, and that's what balance sheet tells us. What is important is the cash flow, right? Whatever profit you do, are you able to convert that into cash flow so that you can also understand the profits are being shown as a cash in the actual account in your account, right? So you have a starting balance in the bank and you have ending balance, and that's a difference, right? In between, you might use that cash to pay dividends. You might use that cash to settle in some of the interest expenses, or you might be having so all that will tell what is the start and what is the end. Okay, so it is important for you to understand then what is the profit and loss, what is the balance sheet, and what is cash flow statement. Okay, I hope this was useful. If you found it simple and easy to understand, do put it in comment box below so that I can keep bringing more nuggets like that. Now let's go to LDCO's balance sheet. Okay, so you can see here from share capital. Okay, so just focus on my mouse. So share capital has been same, which is great. So they're not increasing any kind of capital, which is good. So they started off with in crores 2 crores, which is fine. Their reserves are 325 crores. We have seen that. Okay, so the reserves are continuously increasing, which is also good. Their borrowing is very very minimal. So they had in 2016 53 crores as borrowing, but since then it is constant at 3 crores. Okay, you, this is on the screener website, which is very good. So you can see they're all short term borrowing, right? So they're just using it for working capital. Now total liabilities are 550 crores, and how you are looking at it, and so their total liabilities are increasing, right? Which is what they're using for capital, because they might have purchasing the lands and stuff doing that. So fixed asset is 18, which is what are the fixed asset they have? They have buildings, they have plant machineries, and then they have intangible asset, which is 12.88 crores, and which is 12.89 crores. So intangible asset, which are company brand value and things like that, comes into intangible assets. Or they might have any IPs. In this case, probably the brand value. Gross blocks, and then you're looking at total asset is 516, right? So let's look at the profit and loss here, which is also important. Okay, it is good to do analysis on this quarterly basis, because the sales are around 30 crores as of December, and their expenses were 18 out of 30 crores there. That's their expenses. Remember I told you about profit and loss is income minus expenses, right? So your sales and expenses, so their material costs and employee costs, that's the two costs. And then they had 12 crores of operating profit, right, which is 41% of margin. Now profit before tax was 14, so they are paying 26% tax. So the net profit is 10 crores, and EPS comes in based on free float, based on number of shares. For every share, earning was 10 rupees. So 1 rupee they're earning for one share. The earning is 10.67 earning per share. One share, if you're owning, your earning was 10.67. That was part of your share. Now question is whether the company will give you that, or company will further use it for growth of the company, right? Out of this you get dividends, and rest amount goes back to the company reserves for future growth. Okay, so it is very very good analysis that you should look at all your shares and look at what was the EPS for that particular quarter and for that particular year, so that you know what is your earning, because this is your earning for that investment. Okay, now profit and loss, as you can see here, total for the year is their EPS is what I quickly look at it. The EPS is growing, and they had a bit of a dip, as you can see, from uh, 55, 51 to 44, which is again we'll see at the end of the year. This is trailing 12 months, so which is looks to be they're going to beat that, um, and which will, if EPS is growing, price will grow. That's how you should look at it. But from two company was earning 2.95 from their sales, which is at $46, 46 crores. Now their sales have gone up like almost close to three times, and their EPS has gone up from 2.95 to 51. Why is that? It is because of the operating leverage which kicks in. Because with same employees, same setup, they're able to earn more, and that's where you see the benefit here. So they're giving us a dividend of 16% of whatever they're earning, which is out of 15, they will give 16% as dividend. So if you have invested at the lowest price, you are able to get more dividends today. So that's how you should look at it. Again, from their growths, compounded growth has been for 10 years has been profit growth has been 26%, and price CAGR is 31%. For last 1 year is 22% down. Return on equity is kind of stable, and sales growth is where the problem is. Their sales growth is not happening as they should happen, and that's where the challenge is today. But will that change? We have to see that and track that. Okay, so that's your a detail, and again, these ratios are look at ROC, look at working capital. So the working capital is increasing, which is not a good sign. Their working capital should be either negative, so track that. Cash conversion days is also big, so this is not a good sign. And debtor days, how much time it takes to basically they get the money back, which is also reducing, which is good. So given there is a positivity in reality sector, given track these ratios, you will get some understanding. Promoter holder has not changed, which is also good. And who is owning these stocks? There's no FIS here, but there are some public investors, big investors, they own that. And like Guardian Advisor Private Limited increased their position 3.11. So this is stable. And obviously, there are not major mutual funds are there at the moment. There's because it's a small cap. But as a retail investor, we can look at it because we don't have big capital to invest, and hence I look at it from that angle. Because for mutual funds to invest in this stock, you will have to have a certain threshold before they can get in. But please consider the risk associated with small cap investing can be really dangerous, and you could blow up your capital. So I want to give that warning. I'm not giving any advice, right? And when I look at it, 10 years term chart is setting up nicely for me, and I'll track this closely and keep coming out with more videos on this. So coming back, if you haven't joined my Telegram channel, do subscribe to that. All you have to do is simply go in to sbhatia.co/bio. I'll just type in here so that you can remember that. sbhatia.co/bio. And once you open that, and you can do the secure one, sbhatia.co/bio, and you will be reaching there, and you can follow me here. And Telegram, you can catch me in any of my social media handle, but join me because I'll share the notes of this particular video also on the Telegram, so you can learn from it. So that's all I wanted to cover today. If you have any questions, do put it in comment box below. This is Shivendra Bhatia signing off from Peaceful Weekend Investing. Invest with a plan, not with a feeling. I'm on a mission to help professionals invest in stock market like a pro. Do consider like, subscribe, and share, and hit the notification bell so that you get notified with my next video. Sorry, this video has been a bit longer, but if you are a CS learner, you have to do that. And thank you for staying till the end. I really appreciate that. Bye bye.